Hey guys, it's Ed from Future is Now. I'm here to talk to you about some basic investment skills strategies that I think just would be good for anybody to have. And there are things that I've learned even a long time ago that now are easier to apply because we have charts and data and stuff that's really easy to get to and everything. So anyway, I wanted to start out with charting trends and indicators, and I'm going to apply this to Tesla, for example. Okay, and I'm invested in Tesla, so I wanted to keep a chart on it and see what's going on as far as the technical analysis data. So the second part is diversification. I don't mean like diversify with you need to have real estate and bonds and this and that and whatever. I mean just diversification even in your stocks. I mean, if you have one stock, two stock, three stocks, four stocks, they shouldn't all be in the same category. They shouldn't all be in technology. I mean, maybe put some in gold or precious metals, or put a stock in a specific healthcare, medical delivery. These are all things that move differently based on the markets. So it's just a way to diversify even within stocks, without buying mutual funds or something specific like that. Now, picking the best in breed, this is huge. I mean, no matter what stock you're investing in, invest in the best in breed, the best companies. And I'll give you a couple examples. Like Google, for example, was the best in breed and still is basically in search. I mean, everybody uses Google for a lot of things, and so they're one of the best performers, and the company has taken off from that. You can talk about Apple or Amazon. These are best in breeds, for their specific sectors, and that's big. Or Facebook with social networking, best in breed. Look at what's happening with these companies, and then look and predict the future. People sometimes are like, predict. You're never supposed to predict the future with stocks. Never predict the future. Just kind of react to what's happening. But honestly, I don't believe that. I believe no matter what, if you're investing in something, you're investing on that prediction that that's going to do well. You're not investing on the chance of it failing. You're investing in predicting that future. So there's nothing wrong with predicting the future, but you need to react when something happens, and you can't just be married to stocks. You have to be able to, not be emotional about this. Okay? But also, don't just predict the future on what you think is going to happen, but based on what you want. Something that Galley said on Hyperchange, he said, I don't just invest for the money, I'm investing on the future that I want to see. So that's why I invest in certain companies, and I believe in that 100%. That is a massive, that's a huge, huge concept, and I don't think people should overlook that. Invest in what you want to happen. Okay, that's a big one. So that's just your basic investment skills. And now I'm going to scroll down, and you've got investment strategies, trading strategies. I mean, there's a bunch of ways you can do things to pay based on what time you have and how much money you have and how much effort you're going to put into things. Day trading is a job. I mean, that's night and day. You're paying attention to it all the time. I did this in 2008 with Apple and made good money on that. And then I saw the market turn over, and I pulled out because I didn't want to sell short on a best in breed stock. It didn't make sense to me. There was a lot of people shorting Apple, and Apple dropped all the way down to 90. But look at Apple now; they're at $1 trillion. So anyway, that's a day trading. It's a concept that you have to be night and day dealing with that. Short-term trading is basically trading within weeks and months in a given year, meaning you're buying the dips, and you're selling kind of high in the trends, and then you're buying low in the trends, so you can make more. Let's say a company makes 20% over the year. You might be able to short-term trading make 25% in the exact same stock just by gaining an extra percent or two by hitting the good spots in the market, to get your cost basis lower on your stocks. Now, long-term investing is what most people do. Most people are in long-term investing. I'm long-term investing. I believe in it big because the market goes up long-term. It just does. 7%, 3% on inflation, another 4%. You're talking about 7% on average. I mean, that's a good margin to make. Now, this is for years, maybe 3, 5, even 10 years. So you're investing in a company. Hey, I think this company is going to be really huge. They're not really big now, but they're going to be big in 2 or 3 years, and you follow them and you see how they develop into a big company potentially. So that's long-term investing, which most people do. And then you have the buy and hold concept, which is similar to long-term investing, except you're basically just anytime you get extra money, get extra couple thousand or whatever, you invest in a stock that you like at the time, and you just hold that until you retire and cash out or do something at that point. So those are the four basic ways that I think you can play, stocks and whatnot. And And those, you have to pick based on what you can do and what you want to do. So those are some basic ones. And then obviously it's very important to manage the risk. Okay, it's all about risk management too. Okay, and the first thing is age. Obviously, the older you are, the less risk you want to take. I mean, if you're near retirement, you don't want to be taking crazy risks and be option trading necessarily. Okay, it's dangerous. You want to protect your money as older you get. You want to take some risks when you're younger to try to build wealth. Okay, so obviously the risk curve is important. You got to factor that in based on your age. And then if your personal finances obviously matter. Let's say you have 10 million in the bank. Well, if you invest 5,000, you're not taking any risk as far as I'm concerned. But if you only have 6,000 in the bank and you invest 5,000, you're taking a massive risk. So base your risk on your own personal finances. How much can you risk? And how much, basically do you want to deal with at that moment in time? Okay, speaking of time, how much time do you want to put into? If you can't put any time into investment, you better be pretty safe and pretty conservative. Okay, if you're spending all the time in the world learning stuff and learning how the technicals work and following the markets all the time, you can take more risks, obviously. So it depends on how much time you specifically have. That's a key element. And obviously knowledge. I mean, the less you know about the market and stocks, the less you should be risking. I mean, you can always use a client, use a brokerage house or something, or somebody to help you, that you could do that as well, and that way you can be a little more risky if you have somebody managing it who you trust. So I personally use Schwab because I trust the company. My father used the company for years, and they have a good platform. They have low trading. It's like $4.95 per trade, so it's very low, and it may even come lower because a lot of the companies are coming in with no trade costs, and that may change everything there. But anyway, that shows the basics that I'm aware of, and the ones that I kind of focus on personally. But now let me pull up Tesla and my stock that I basically are tracking, and I want to show you basically what's happening. But I'm gonna scroll it back and show you what's going on here. Okay, we had a big drop in the year. This is about a year span, and we had a pretty big drop here. Okay, they had all kinds of bad news and stuff going on, so news was driving a lot of traffic. And anyway, you can see moving average is one of the big things I use. Standard moving average, I use a 50-day in Tesla. I mean, you could use 20, 50, 100, 200. The 50 seems right for this stock. Personally, I like the 50 because it's just, I'm not getting it out every 5 minutes, but I'm not, also I'm trying to really maximize the gains, and so anyway, you can see up on the top of this trend, downward trend, you can see where it's cutting down on the moving average line, and it bounces it and it bounces it, and you can see a V bottom right here. That's plain as day. Okay, V bottom, and you can see that downward trend, sorry. And then anyway, you can see where it breaks the 50-day moving average here, which is a good buy point. Okay, but you don't really see at this point an actual trend following. I mean, that market could still be going down, right? But now it cracks down here and it forms another basis on an upward trend channel. I don't like 2 only. I want 3 is what I like, because now I have a solid trend. You can see boom, boom, boom. It's right on those, kicking off that, breaks the 50-day here. Big surprise, it goes through the little wedge. You can call that a flag, a wedge, a triangle, whatever you want. But when it breaks that, and coincidentally, it broke the 200-day moving average actually today, which is a big indicator for any stock in general. So, and it was up like $8.35 for the day. That's monstrous. I mean, that's a huge boost, and I think it was mainly because it broke not just one thing. I mean, it was above the trend line. That's one. It's above the 50-day moving average, that's 2. It broke the wedge, which is 3, and then it broke the 200-day moving average, which is 4. Big surprise, the market saw this, and technical people saw this and bought in, and you could see a lot of buying today. So, I mean, you could see, I'm not trying to predict the future up here, but it's in an upward channel right now. I would worry about it if it was below the channel, below the 50-day, or whatever, and that would change my perspective on where we should be in this. But this is how I look at Tesla, for example, and this is how I do a basic chart. It's not complicated to do. You can set your channel marks, and it's really easy to move them in and out, and it's, you know, and it's adjustable. So you've got to be willing to be adjustable with things and not just be like, oh my God, I broke this, I'm buying. And you know, you've got to, you know, really see, don't just bet on one indicator, you know, bet on multiple indicators. And anyway, I hope this helps as a basic concept of when to buy and sell on different stocks. And I just use this for an example, but if you have a stock that you want me to run a quick analysis of, I can do a quick chart, boom, put it up on my next video, and you know, and talk about it, and you know, we'll mention who you are or whatever if you want, or and see, you know, see what it looks like, you know. Anyway, I hope you enjoyed it, and I'll be putting out more videos similar, but this is the basics, and I think everybody needs to know those concepts, and it's really important. It's helped me a lot to invest unemotionally. Okay, don't invest on your emotions of fear and panic and confidence. Okay, invest on the basics, invest on the data and the strategy. All right, thanks a lot. I really appreciate it. Take care.